Now, having prepared this, then you now prepare their current account. So, having prepared after you prepare the current account, then you prepare balance sheet. Tunde has not been admitted here. Tunde has not been admitted at all. So what Tunde is not entitled in sharing of profit because he is just about to be admitted, so he has nothing to do with the profit here. So now let's now prepare the account of James, Luke, and John, and let's write Tunde also here. Then the same thing, James, Luke, John, Tunde. Debit and credit side. So that is that. Then, so their new current account now, if you look at the balance BD, let's look at their balance sheet. The current account they have before is James. James has 15,000. Luke has 20,000. While John has 170,000. Today is just a new partner. It doesn't have anything to do with the current account here. Then share of their profit from the revaluation, that means revaluation profit. So you transfer them to their bank account. This is your balance they have in bank account. Then since they have profit in revaluation, you transfer it down to their current account. So James is 7,000, 7,000, 7,000. So Tunde does not have any share in any current profit here. So at the end of the day, you have this. So the amount they have in bank account is 22,000, 27,000, then 24,000, and Tunde does not have anything. So then the balance, you must balance the other side. So 22,000, you bring it down, you carry it down, which is 27,000. This is 24,000. $27,000. So that is that about. Then we now prepare balance sheet, which is the last one, showing that Tunde has been admitted into the balance. You see, this is this current balance is going to their balance BD. Don't forget 22,000, 27,000, 24,000. So this is the amount that is going to the balance sheet. That means their new current account now. So we now prepare balance sheet. You prepare balance sheet to show that Tunde has been now. After having done that, Tunde will now be admitted. So capital account. Their capital account here is James. You know James is a capital account still remain 200,000 in the question. In the first balance sheet, look, 200,000. John 200,000. Now don't forget that Tunde shall bring 145 as the capital. So since he has been admitted into the partner, so his capital must be included in the balance sheet. That is 145,000 naira. So that gives you 745. And don't forget their new current account. So their new current account is James, 22,000, because share of profit have been added, so it has increased their current account. So look, then John 24,000. So that is 73,000. And don't forget in the question, in the former balance sheet, because creditor is not it is not valued here. It is not valued. The same thing they have here, you repeat it, creditors, because creditors is not valued, so we don't have anything to do with creditors. Then accruals still remain 7,500. Now if you add it, you have 878,500. Now let's look at the asset side to know whether we balance it at the end of the day. Now fixed assets. Don't forget in the question that you know it is valued. The following assets are valued. This value is what we write in the asset, because it does not bear the value in the former balance sheet. It has a new value now, of which it is premises. You know, we've done the adjustment to know whether there is an increase in value, but the value at which they value it, the amount that which we value it, will stand as a figure or value in the balance sheet. So premises is 3,000. It was valued at 3,000. So that 3,000 is what you write in the fixed asset. Then furniture and fittings is 152,000 in the additional information, so it will not change at all. You won't write that one in the former balance sheet. So this one also is 63, while plant and machinery is 45. So the total is 560,000. Now let's go to current assets. Then the same thing, stock is also 16,000. Still stand the same. Now let us now go to debtors. The debtors before, if you look at the question in the former balance sheet, is 26,000 naira. And since we are told to adjust for provision, which is 35, then that means the debtor will not stood 26,000 again. We must deduct provision for bad debt 35, which will give you the debtor balance at the end of the day. So less provision for bad debt, which is a provision for bad debt, which is a 3,500. So the new balance for debtor is 22,500. Then after that, we have a goodwill, because we are told that goodwill should be retained. It is valued at 35 and they have to be retained in the book. So you must retain goodwill. So goodwill is a 35,000. 35,000. Goodwill is 35,000. Now let us now look at our bank. I will tell you something. The effect of a balance sheet. Looking at the question here, you will see in this question that the bank before was 100,000 in the former balance sheet. Since Tunde has been given 145 into the business, it will increase their cash or bank. So you know they are collecting amount of 145. So once he increase the capital side, then he has to increase the asset side. So it is no more 100,000 again. You add it plus 45 as Tunde put into the business that bring in as 45 and 1 capital. So that will give you 245. That means 100,000 before plus 145 that Tunde gives into the business. That will be 245. So that is that. At the end of the day, so then you add it, this plus this plus this plus this amount So you add the three together, you will see that at the end of the day, you have 8,785,000 at the end of the day. So that is that on the revaluation account. Though there is a retirement of dissolution of account, but here in the syllabus, in the curriculum, we are only restricted to partnership and the admission of new partners. That is where the exam is likely to come out. So that is what we have done on evaluation, and that's how you prepare it when the question is given to you in the exam. Team 3, we have accounting of non-profit making. And when we're talking about accounting of non-profit making, we are talking about organization that the purpose of establishing it is not for making profit. So those organizations, they call them non-profit making organizations. So the account we use